HMRC has a file on you right now. Not a suspicious file, not an investigation, a live, constantly updated digital record that contains your tax code, your income, your national insurance history, any refund you are owed, and in many cases, information that is quietly wrong. Wrong in ways that are either costing you money every month through an incorrect tax code or building you a liability that will arrive as a letter in the weeks ahead. The difference between the people that liability surprises and the people it never reaches is one thing: whether they checked their personal tax account before HMRC acted on the information inside it, or after. Welcome back to HMRC Update. Today, I want to do something slightly different. Instead of covering one specific rule change, I want to walk you through the 5 things that every UK taxpayer needs to check inside their HMRC personal tax account right now, in July 2026, and explain exactly what each one means, what to look for, and what to do if something is wrong. Because right now, across all of those 5 areas, HMRC is either taking action, sending letters, or making automated adjustments, and the people most affected are the ones who have not looked at their account recently. If you are not subscribed to HMRC Update, please do that now and hit the bell. This channel covers the things HMRC does not write to explain clearly. Subscribe. Let us get into it. First, how to get in. From the 9th of February 2026, HMRC began moving new users to gov.uk One Login, a single government-wide sign-in system designed to replace the old Government Gateway over time. If you already have a Government Gateway account, keep using it as normal. You do not need to switch. If you are setting up access for the first time or have lost your old credentials, you will be directed through gov.uk One Login instead, which uses an email address and password rather than a 12-digit user ID. To access your personal tax account, go to
gov.uk/personal tax account. To verify your identity, you will need your national insurance number and at least 2 supporting documents, typically a recent payslip or P60, plus a valid passport or driving license. Once inside, everything HMRC holds about your tax position is visible in one place. The 5 things I want you to check are all in there, and at least one of them is likely to show something that requires your attention. The first thing to check is your tax code. Your tax code appears on your payslip and inside the PAYE section of your personal tax account. For most employed people in 2026 to 2027, the standard code is 1257L, reflecting the £12,570 personal allowance applied against your income before any tax is deducted. If the code showing in your account matches what is on your payslip and reads 1257L with no prefix or suffix adjustments, and your circumstances are straightforward, that is likely correct. But a significant number of people are not on 1257L, and many of them do not know why, or that the adjustment being applied is incorrect. Your personal tax account displays your current tax code, the allowances and deductions used to calculate it, and a breakdown of each income source HMRC holds on record. Look at what is generating the adjustment. If your code is lower than 1257L, say 800L or 950L, it means HMRC is collecting additional tax through your payslip. The reason will be shown in the account. Common reasons include a benefit in kind from a current or previous employer, an underpayment from a previous tax year being collected gradually, or an estimated savings interest figure that HMRC is using to adjust your allowance. All of those can be correct. They can also be wrong. A benefit in kind from an employer you left 2 years ago that is still being applied to your current year's code is wrong. An estimated savings interest figure based on a previous year's rate that no longer applies is wrong. An underpayment being collected that
you have already paid in full is wrong. Each of those errors costs you money every month through a lower net pay, and none of them correct themselves automatically without you raising them with HMRC. If your code looks wrong, call HMRC's Income Tax Helpline on 0300 200 3300 with your national insurance number and the details from your personal tax account. HMRC can correct a code, and the adjustment typically appears in the following month's payroll. The second thing to check is your national insurance record and state pension forecast. Inside the personal tax account, you can review your national insurance record, check gaps in contributions, and see your state pension forecast. The forecast shows you the amount you are currently on track to receive at your state pension age, and how many qualifying years you have built up versus the 35 required for the full new state pension of £241.30 a week. This check takes approximately 5 minutes, and the information it returns can be genuinely significant. Gaps in your record from years of low earnings, time spent abroad, time out of the workforce raising children where credits were not automatically applied, or years of self-employment where contributions were not made, All of those show as missing qualifying years. Each missing year permanently reduces your state pension, unless the gap is filled. Drop a comment below if you checked your national insurance record and found a gap you were not aware of. It is one of the most common things people discover when they look at their personal tax account for the first time, and it is one of the most actionable, because voluntary contributions to fill gaps from the last 6 tax years remain available. The cost is approximately £907 per qualifying year. Each year added returns approximately £6.89 per week in additional state pension for life, over £7,000 on a 20-year retirement. Before paying anything, call the Future Pension Center on 0800-731-0175 to confirm that
filling a specific gap will actually increase your pension. In some cases, it will not, and that call saves you spending money that changes nothing. The third thing to check is whether HMRC is showing any refund or balance owed against your name. The personal tax account displays estimated refund or balance due information and allows you to sense check any refund-ready message before paying a third party to claim it on your behalf. If a refund is showing, you can claim it directly through the account. No third party required, no commission taken. The money transfers to your bank account within 5 to 21 working days of the claim being submitted. If a balance owed is showing, an underpayment from a previous tax year, a simple assessment figure, or a tax charge being collected, that information is also in the account with a breakdown of how the figure was calculated. Check it against your own records. If the underlying information is wrong, an income figure that does not match your actual earnings, a savings interest figure that includes money held in an ISA, a benefit in kind that was incorrectly reported by an employer, the 60-day window to challenge a simple assessment letter runs from the date on the letter, not from the date you discovered it. If that window is still open, call HMRC on 0300-200-3310 to raise it. The fourth thing to check is whether your personal details on HMRC's record are current. This is the one that most people skip entirely, and it is the one that causes the most disruption when it turns out to be wrong. Your address on HMRC's records determines where letters, tax code notices, simple assessment demands, and penalty notices are sent. If you have moved in the last 2 years and not updated your address with HMRC, those documents are going to a previous address. You are not receiving them, but the deadlines inside them are still running. You can update your address, phone number, and name details directly through your personal tax account. The update takes less than 2 minutes. If your address is currently wrong on HMRC's records, every piece of correspondence HMRC has sent since you moved has been going to the wrong place. Check it today and update it if it does not match where you currently live. The fifth thing to check, and the one most relevant to the specific action HMRC is taking right now in July 2026, is whether a payment on account deadline is showing against your self-assessment account. HMRC has warned millions of self-assessment taxpayers that the second payment on account for the 2025 to 2026 tax year is due by the 31st of July 2026. If you filed a self-assessment return last year and your total tax bill exceeded £1,000 with less than 80% collected through PAYE or another source, you were required to make 2 advance payments on account this year, one in January and one now in July. The July payment is half of your previous year's total self-assessment bill. Inside your personal tax account, under the self-assessment section, you can see the exact amount due on the 31st of July, the payment reference, and the payment options. Payment can be made by bank transfer, through the HMRC app, or through your online banking using HMRC's bank details. The payment must reach HMRC's account by midnight on the 31st of July. A payment initiated on the 31st of July that does not clear until the 1st of August is treated as late. If the amount shown is more than your current year's income genuinely warrants, because your income has dropped, because you moved into employment under PAYE, or because a significant one-off income from last year will not recur, you can apply to reduce the payment on account through your personal tax account. The form is the SA-303 online equivalent and can be completed directly through the account. Submit a realistic reduced figure based on your actual current year position. If you reduce it too aggressively and your bill turns out to be higher, if HMRC charges interest on the shortfall at 7.75%, backdated to the original due date. But if your income has genuinely fallen, overpaying now to receive a refund in January is unnecessary, and the account gives you the means to correct it today. If you cannot pay the July amount in full, regardless of any reduction, the most important step is to contact HMRC's payment helpline on 0300-200-3822 before the 31st of July, not after, and ask about a time-to-pay arrangement. An arrangement agreed before the deadline prevents the late payment penalties that apply on top of the interest once the deadline passes. After the 31st of July, the conversation with HMRC becomes more limited and more expensive.
So, here is the complete checklist and what to do with it today. Go to gov.uk/personal-tax-account. Sign in with your government gateway credentials or gov.uk One login. If you do not have access, set it up. You need your national insurance number and 2 forms of identity verification. Check your tax code under the PAYE section. Compare it to your payslip. If the code is lower than expected and the reason shown in the account does not match your current situation, call HMRC on 0300 200 3300 to have it corrected. Check your national insurance record and state pension forecast. If gaps are showing, call the Future Pension Center on 0800 731 0175 before paying voluntary contributions to confirm filling them will increase your pension. Check for any refund or balance owed. If a refund is showing, claim it directly through the account. If a balance is showing and the figures look wrong, call HMRC on 0300 200 3310 within 60 days of any letter date. Check your personal details, name, address, contact information. Update anything that has changed since you last used the account. And check your self-assessment section for any payment on account due on the 31st of July 2026. Pay it, reduce it if appropriate through the SA303 route, or call 0300 200 3822 before the deadline to
arrange a payment plan if you cannot cover it in full. HMRC's personal tax account holds more information about your tax position than most people realize, and it is available to you at any time without needing to ring a helpline, write a letter, or wait for a document to arrive in the post. The people who are caught by wrong tax codes, missed refunds, incorrect national insurance records, and July payment deadlines are, in most cases, the people who simply have not looked. You now know exactly what to look for and where to find it. If this video helped you find something in your account that needed attention, share it with someone who has not checked theirs recently. One share could prompt a conversation that saves someone a penalty, fixes a tax code they have been overpaying on, or reveals a state pension gap they can still fill. Subscribe to HMRC Update if you are not already here.